Market Outlook, Calendar Week 48. Calendar Week 47 confirmed the picture of a nervous but still orderly market. On the macro side, we saw a mix of cooling activity data and persistent uncertainty around the future interest rate path. Purchasing managers' indices, labour market figures, and housing data all pointed in the same direction. Growth is losing momentum, but has not yet tipped into a clear recession. This in-between state keeps volatility elevated. Capital remains cautious, waits for orientation, and reacts very sensitively to every new data point. For digital assets, this translates into an environment where moves tend to overshoot quickly and then unwind just as fast. Bitcoin remained the clear pace setter in week 47, but failed to establish a sustainable uptrend. Interim rallies were sold into, order books often appeared thin, and signals outside BTC and ETH frequently faded after only a few hours. Many altcoins reacted impulsively to project-specific news, but lost momentum as soon as follow-through volume dried up. Overall, the market behaved more like a system focused on capital preservation than on building new risk exposure. The sentiment indicators reflect this clearly. The Crypto Fear and Greed Index dropped from around 18 points in the previous week to roughly 10 points now, signaling deep extreme fear. At the same time, Bitcoin dominance sits just below 60% at around 58.5%, after roughly 58.8% in the previous week. Capital therefore remains anchored in core beta. There is no broad-based alt season, only short rotations that, in case of doubt, revert back into Bitcoin. The downside risk for overstretched rebounds remains high, while the willingness to build fresh long exposure is limited. From the perspective of quantum data analytics, this setup is clearly defensive. The combination of extreme fear, thin books, and macro-driven spikes increases the probability of false signals and avoidable drawdowns. In calendar week 47, we therefore made a deliberate decision not to provide any research signals. Rather than forcing entries in a market without clear structure, our focus was on observation, data collection, and scenario planning. In phases like this, not trading is an active risk management decision, not a missed opportunity. Looking ahead to week 48, the next wave of macro data moves into focus. The IFO Business Climate Index provides a fresh view on sentiment in the German economy. Shortly afterwards, US producer prices and consumer confidence are released, before midweek brings the second estimate of US GDP and the PCE inflation data. These numbers will shape how credible the soft landing narrative remains. If they confirm easing inflation alongside stable, but not overheated activity, that would support a cautious risk-on environment. Inflation surprises to the upside, or clear signs of weakening growth, would instead validate the current extreme fear and could trigger further deleveraging waves. These signals are complemented by inflation data from Japan, activity figures from Europe, and purchasing managers' indices from China. Taken together, they form a global picture that feeds directly into expectations for interest rates and liquidity. For Bitcoin, Ethereum, and altcoins, this means that volatility is likely to increase around the key release windows, especially if data prints clearly above or below expectations. Whether these moves turn into lasting trends will depend less on the headline itself and more on whether fresh liquidity follows in the same direction after the initial reaction. Against this backdrop, quantum data analytics remains deliberately selective in week 48. Around the most important data releases, we reduce or pause automatic execution to avoid slippage and misfills during illiquid phases. Potential setups are treated primarily as swing scenarios, with clearly defined invalidation levels and controlled position sizes. Illiquid altcoins are filtered particularly strictly. Capital preservation takes precedence over chasing short-term outperformance spikes. Only when structure, volume, and timing align will a renewed activation of research signals come into consideration. This publication does not constitute investment advice and contains neither a recommendation nor a solicitation to buy or sell crypto assets or any other financial instruments. The analyses and assessments of quantum data analytics serve informational and research purposes only. Every investment decision is made independently and at the sole risk of our clients. Strategies may be adjusted, delayed, or suspended at any time, depending on market conditions. Quantum data analytics, analytic, strategic, innovative,